The four key takeaways from the Toronto Regional Real Estate Board's October 2025 report. Toronto's housing market often feels clouded by conflicting headlines, some predicting a collapse, others pointing to resilience. To clarify the picture, we examined the latest official data from the Toronto Regional Real Estate Board, TRREB, for October 2025. The results reveal four surprising, data-driven insights into how the market is truly evolving right now. 1. A buyer's market. Sitting empty as uncertainty trumps price drops. The overall trend is clear. The Greater Toronto Area, GTA, has shifted decisively toward a buyer's market. The average selling price fell 7.2% year-over-year, dropping to $4,372 in October 2025 from $1,364 a year earlier. However, despite these more favorable conditions, many potential buyers remain hesitant. Those with stable employment and stronger financial confidence are taking advantage of improved affordability, but a large portion of would-be buyers are delaying purchases due to concerns about the broader economy. This highlights a psychological gap in the market, where economic uncertainty and cautious sentiment are outweighing the appeal of lower prices. 2. Listings. Surge as sales continue to slide. October data points to a clear supply-demand imbalance. Home sales declined 9.5% compared with the same month last year, while new listings rose 2.7%. In total, 6,138 homes were sold, and 16,069 new listings entered the market. This widening gap is giving buyers more choices and greater leverage in negotiations. With inventory levels climbing and fewer transactions closing, sellers are increasingly competing for a smaller pool of active buyers. 3. No breakout, semi-detached homes show relative resilience. October figures by property type show that while all segments experienced lower sales compared with last year, semi-detached properties were the most resilient in terms of transaction volume, falling only 2.8% year-over-year. Price declines for semi-detached units, 6.5%, were moderate relative to townhouses, or 8.3%, and detached homes, at 7.3%, and larger than the smaller price correction in condos, 4.7%. In short, semi-detached homes have behaved more robustly than other segments in October, not because of a surge in demand, but because they experienced the mildest sales decline and a mid-range price correction, which may make them relatively more attractive to buyers seeking balance between space and value. 4. Affordability gets a double boost. Beyond falling home prices, buyers are also benefiting from relatively stable borrowing costs. With 5-year fixed mortgage rates hovering near 6.09%, affordability is improving on two fronts: lower property prices and steady interest rates. Together, these trends are reducing average monthly mortgage payments across the region. For many households, this shift is making it possible to purchase homes that better match their needs and budgets, marking one of the most accessible environments for buyers in recent years. Conclusion: a market in transition. The October 2025 data reflects a market in transition. Prices and borrowing costs have eased, while listings continue to rise and sales remain subdued. These conditions suggest a clear shift toward a buyer's market, though overall activity is still being tempered by broader economic uncertainty. The latest figures also highlight that affordability pressures are moderating, yet sustained improvement will depend on both economic stability and continued progress in housing supply. TRREB emphasizes that housing remains a key component of regional growth, requiring collaboration between policymakers, industry participants, and private capital to support long-term development. In short, the market is adjusting, not collapsing or rebounding, but moving through a period of recalibration that may set the stage for future stability once confidence improves.
Thanks for watching. That's all for today's update. Don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time.